The Bank of Canada recently announced a rate cut, and we are seeing it all over social media. Things are going absolutely crazy, and it is a complete Armageddon in the real estate industry right now. I'm completely kidding, guys, but in today's video, we are going to dive into the most recent interest rate cuts, how it's going to affect the Canadian real estate industry, and what exactly it means for you as a buyer, seller, or investor. And if it's your first time here, my name is Stepaniuk, your Canadian real estate resource. And on this channel, we talk all things real estate. I help people generate wealth through real estate. So if you're looking to buy, sell, or invest, then make sure you call me. I'll leave my contact information in the description below. And if you want to keep up to date with more content just like this, make sure you like the video and smash that subscribe button so you don't miss a beat. So just in case you've been living under a rock and you haven't been on social media lately, the Bank of Canada recently announced that they're going to be cutting the variable interest rate down 25 basis points to 4.75%, which is the first interest rate decrease since March of 2022. And this brings an end to a 2-year rate hiking cycle. But if you look at some of the data, there are some considerations to be aware of in terms of how it's going to be affecting you as a buyer, seller, or investor, and how it's going to play out in the Canadian real estate market. And the first consideration is that the debt servicing ratio in Canada is currently at all-time record highs, and the GDP per capita is contracting, and it has been for 7 quarters, which means that we are in a very weak economy and kind of on the brink of recession, right? And for small businesses, delinquencies and insolvencies are on the rise, and we can really see some of the stresses that the economy is starting to have on individuals, on families, and on small businesses. And if you're a variable rate mortgage holder in Canada, for every $100,000 that you're currently borrowing, you're going to save about $15. So if you have a $500,000 mortgage, you're going to be saving $75 per month, which it's okay, but it's not really enough to move the needle. And even if the Bank of Canada continues to drop interest rates over the next 6 months, 50, 75 basis points, yes, it's going to spark some short-term interest in entering the market, but it's not going to change the overall financial equation for the majority of Canadians that are currently holding mortgages or are in tough financial situations. All right, so what does this mean for the Canadian real estate market as a whole? So ultimately, it's going to have a short-term impact, and likely we'll see an initial burst of activity in the real estate market. It's pretty reasonable to say. And the Bank of Canada has finally now kind of given us a little bit of direction as to which way interest rates are going to be heading. And as inflation continues to stabilize, it's going to give more people more certainty with the interest rates that are coming and give them more confidence in entering the real estate market if they are deciding to go with a variable rate mortgage. So you'll likely see an uptick in the market here over the next couple of weeks. And if the Bank of Canada continues to lower interest rates with the announcements in July and September, which we are kind of trending in that direction, we can expect to see more buyer interest here over the course of the rest of the year. So what does this mean for you as a buyer, seller, or investor potentially looking at getting into the real estate market? Well, for first-time home buyers, this recent interest rate decrease is a positive sign and can potentially lead to lower monthly mortgage costs. And if interest rates continue to decrease over the course of the next 6 months, the buyers that have been sitting on the sidelines will likely ramp up their home search efforts because of the additional purchasing power that they are getting with these decreased rates. So it is important to consider that although the monthly mortgage rate may decrease, because the competition is going to be increasing, it may drive home prices up and potentially make the overall purchase price of houses more expensive. Now, for those holding variable rate mortgages, this will provide some relief, but the effects of that will entirely depend on the structure of their mortgage. Either they're going to see a lower monthly payment or more of that payment is going to go towards their principal. And for those that are up for renewing their mortgage, despite the interest rate reduction, those with mortgages from 2022 or earlier will likely face significantly higher rates if they are to renew within the next 6 to 12 months. All right, guys, that is the video for today. I'm sure you've seen everyone and their dog post about the interest rates on their social media, but I just wanted to hop out here and chime in and give my 2 cents about where interest rates are headed and what it ultimately means for you as a buyer, seller, or investor that is potentially looking at entering the market. And again, my name is Stepaniuk. If you want more content just like this, you got value on this here today, make sure you like the video and subscribe to the channel. If you're looking to buy or sell, or you just want to connect on the market and how to navigate it, I'm going to leave my contact information in the description below. You can reach out to me and connect with me anytime. Thanks again for watching, and we will see you on the next video.